Sri Lanka's plan to restructure its external debt is expected to significantly reduce its financial burden and make managing the country's debt more sustainable. Here's a clear overview based on the latest data and analysis. As of the most recent data published by the Government Treasury Department, Sri Lanka's total external debt stands at $38 billion, categorized as follows. Multilateral debt, $12 billion, owed to institutions like IMF, World Bank and ADB. Bilateral debt, $11 billion, including China for $5 billion, India $1.5 billion. Commercial borrowings, $15 billion, predominantly international sovereign bonds or ISBs, totaling $12.5 billion. The restructuring process aims to adjust repayment terms to ensure sustainability while mitigating short-term financial strain. The following agreements were reached with external lenders. However, these are currently pending official agreements. ISBs. Proposals involve capital haircut, maturity extension and lower yields on $12.5 billion worth of outstanding debt. Two options were presented to the lenders, local or global. Official deadline for the bond exchange was 12 December 2024. Official Credit Committee, which is Paris Club and India, and China Exim Bank. Concessions include grace period for capital repayment and reduced interest rates on approximately $10 billion outstanding debt. China Development Bank. Restructuring terms for lower interest rates and extended repayment periods were agreed in principle for approximately $3.3 billion outstanding. Post-restructuring, Sri Lanka's debt composition will shift towards concessional loans, reducing reliance on costly commercial debt. The key outcomes are as follows. ISB restructuring. An estimated 35 to 45% impact due to capital haircut of 27% and maturity extensions beyond 2029 and reduced average interest from 6.4 to 4.4%. The total savings amounts to approximately $5 to $6 billion. Annual interest saving. Debt servicing cost will decline now by around $750 million to $1 billion a year, creating a fiscal space and easing pressure on the external account. As per the data published on the Government Treasury website, overall, due to the agreements reached with Official Credit Committee, ISB holders, China Development Bank and Exim Bank, Sri Lanka will now have over $17 billion debt service relief during the IMF program period. What does this mean for the exchange rate? Forex reserves anticipated to grow from current $6.4 billion to $7.2 billion by the end of 2025 as per IMF projections. Exchange rate outlook. The dollar rupee is expected to stabilize within 290 to 300, supported by reduced debt servicing outflows and improved investor confidence, taking into account the rising import demand and continued momentum in the tourism and worker remittances. Sri Lanka's debt restructuring marks a significant step towards financial stability and debt sustainability. Stay informed to understand how these changes might impact your finances and investments.